Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So what I like to do is we definitely at times can see a different outcome in each seasonal trade. We might see a massive reversal, or we might only see the market stall and pause, or it might not work at all. So I need to be prepared for any virtual outcome. And that's why I think it's important that we explore how to take at least advantage of a potential setup, and not just, as the old cliche is, manage your risk and the profits will take care of themselves, but manage a position and don't be completely all in any one type of strategy, but use multiple strategies so that you could profit from a potential market move with any type of outcome. And I think that's what's kind of important. So first off, I'd like to, again, thank, and I don't know if anyone else out there tries to do things like this, but first off, I think that's what's the neatest thing about using various instruments and options on those instruments, because it gives us the flexibility to kind of spread ourselves around using limited cash outlay. And that's one of the great things about trading, and particularly trading markets such as the ISE's Euro Currency Index. So I'm going to go and advance the slide right now. As you can see, there are numerous products that we can trade. I've just mentioned about the Australian dollar, and in fact, if you notice the AUX and the AUM, this index trades both the inverse dollar-Aussie relationship and the Aussie-dollar relationship. Brazilian real, the British pound, which, by the way, from a seasonal perspective, I don't know if many people here, I can't really poll the audience, but back in September, I think it was Tuesday, September 7th, for my own, we did a webinar and hosted a morning session and also did live trading in the afternoon for that day. We did a webinar for people in which we were talking about several trading opportunities, a potential reversal in equities by mid-month. We were looking for the euro currency to rebound and rally in value by mid-month going into the end of the month. And guess what? We're at the end of the month, so I'm really excited about being here today to share with you not only what we talked about then, but what I'm talking about now and what I'm doing looking forward into the month of October. We also mentioned that the Japanese yen peaks in value mid-month. And what was interesting is that right on cue, the Japanese yen did reverse. And of course, we use the Japanese yen futures, so we would be looking for a bottom in as the ISE has the Japanese yen index. It's dollar yen related, and it's the symbol YUK, Y-U-K. They have a lot of different products to offer, and I think it's really exciting when we have different things happening in different parts of the world for different reasons, such as the Australian dollar and being so heavily weighted to gold price fluctuations, and also the fact that they're raising interest rates. So interest rate differentials seem to, also come into play. The British pound, is which we are bullish longer term, and we're starting to see that market perform as accordance to its seasonal tendency as well. And of course, it's the euro currency, which we have two ways of participating in this move, using the EUI and the EUU. So we're going to be focusing today's seminar, because we are at this juncture dealing with a seasonal tendency right now. So I thought it'd be great to kind of put together how do we spot an opportunity, and then how do we apply trading techniques and which strategies to that opportunity. And that's what we're going to talk about. So I think what we really do is how to help traders, because most traders don't know how to identify how to stay with a trending market condition. Number one. Number two, people have a hard time identifying when a trend exhausts itself or ceases to exist. And more importantly, how to set profit and loss points of interest. And I think the most difficult thing is that people don't understand that there is seasonalities in markets, especially in foreign currencies. We'll try to go over these points and answer your questions today as best as possible. Now, seasonal patterns, and I just kind of mentioned about the average date, the average time period. Some years it might come in a little early. Some years it might come in a little bit later. So we look at the average date and price fluctuation. In the 11 years that we've been seeing the euro currency trade, it has really had a wild swing all over the board. I mean, from its opening print straight back down to 89 handle, 87 and change, and then straight back up. I mean, we've seen this thing move across the volatility scale. If you're not familiar with it, punch up a longer-term chart. You'll see what we're talking about. But stocks, commodities, and even foreign currencies have a strong tendency to demonstrate seasonal price patterns, mainly because there's an inflow of different times of year where there's an increase in supply and an increase in demand. So it's those supply and demand effects. We tend to see them towards the end of the year. We tend to see them towards the end of quarters. And, that's why it's kind of nice to come around here when we have this situation. And Steve's heard me now several times and now for a few years at either expos and even for his own company presenting like I am today, give the introduction of these seasonal events, and they've been pretty reliable. So I got to go with them. Now, the key is that, understanding that trading you have to have risk capital, number one. You got to be properly positioned to participate in a move to profit from it once you are right. And number three, you got to be able to determine when you're wrong and how soon. And that's one of the neat things about using seasonal analysis combined with other tools, because you'll know within a relatively short period of time when you're wrong. And I think one of the things that's a neat way of trading in the markets using this type of directional analysis is to diversify your position so that if the market moves against you, you won't take a huge hit. If the market has a tremendous swing in your favor, you'll be able to capture that move and have a position on. Or if the market just doesn't really move, you'll be able to participate from that. So that's the key. It's not just the key, as they say, of life or financial success in diversification of products, but perhaps diversification of an opportunity, diversifying using different strategies. And that's one of the things that we are sharing today with you. But one of the things that can happen with seasonal patterns that I think it's neat to explain is that moves can either be muted, meaning they don't move as far or high enough, or if we're bullish, we just don't see that follow-through enough, or moves can be magnified depending on either economic turmoil, recovery, political events, economic appointments, economic reports, or appointments such as presidential election and fiscal policy changes and moves by Federal Reserves and central bankers. So these are the things that we got to focus on and what makes the foreign currency markets move.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.